Morning and welcome to One Financial Markets Morning Commentary. I'm Andrew Johnston. Okay, so yesterday, bit of a crazy day yesterday in terms of markets. Certainly euro dollar all over the place. And the one I want to firstly talk about from a geopolitical stance of the product is the Dow and what's happening in the US at the moment. If you look at the chart on the screen, we had what I call as a Trump slump yesterday. In the Dow, he sold off nearly 260 points, basically on him not being able to handle his business at home and zero confidence. I think there's other contributors to this move, which I'll discuss when we go on to talk about euro dollar. But let's just go through the facts now of what's happened over the last couple of days with Trump and why people are just getting fed up with his stance and him as a leader. It's the confidence vote, the health of economy, the movement, the way that the buoyancy and the strength of your equity market, your companies is all led by the leader of the country. And if there's people who has no confidence in that, then why should you have any confidence in the equity markets or the companies based in that country? So we know what happened at Charlottesville News Conference, a complete catastrophe in terms of his standing as a human being. Press envoys and everyone just took him to bits there. It was a shocking display, and his press secretary, as I said yesterday, was nearly in tears. And then obviously the CEO's disbanded from his strategic policy forum before he said that he disbanded it. People are jumping ship, the rats are getting off first. And then Gary Cohn is being cited as perhaps potentially resigning. Now he's the head of economic policy at Goldman Sachs, and he's Jewish as well. So he was very taken back that Trump did not club these these right wing neo-Nazis into place straight away, and was very, very held back about his comments. So the comment on the street is if Cohen goes, there will be an immediate crash in the market. He's the guy supposed to push all this tax reform through, and he was one of the people that he was quite stable behind Trump and had a good head on his shoulders. So we're just looking at the US at the moment and how it's panning out. It's as I've said previously, there's some horrible undertones going on in that country, and there have been for a while, but now it's all coming to the fruition, and it's really ugly. So this is going to affect the equity markets on a global basis, and I think that's probably what added to the Trump slump yesterday. So the Trump slump, albeit was confidence, but I think it's a lot of overseas confidence going out of the market. So a lot of overseas portfolio managers selling their dollar-denominated US assets and then getting out. However, let's just look at another trade, which we look on a daily basis, and euro dollar, the largest of the FX pairs out there in terms of daily turnover. And let's just, I was completely gobsmacked by what happened in euro yesterday, just based on what I'm going to show you in the following. So this 43 pip move here on the 16th was Draghi saying he wasn't going to talk about policy at Jacksonville. All right, okay, fine. So we come back, the market pulled off, as we said yesterday, and it retraced just above 117.50. Then, yesterday morning, and all through the morning until the 12:30 ECB minutes, people were selling euro slowly further and further and further down until we got to the release of the ECB minute here. Let me bring it up on a 1 minute chart. And where the ECB revealed in the minutes that concerns about euro overshooting. Basically, it's just dovish rhetoric, more dovish than expected. And it was really unusual for the market to have a movement like it had earlier. And then on the actual minute release, it dropped 36 pips, then retraced in the next 20. I'm going to say it. Someone got that report early. It got leaked. That trading over, there was nothing released. We had some 10 o'clocks, ECB trade balance and CPIs, which were nothing to talk about. And the way the market drip fed down slower all through the session until that half 12 release was uncanny. And I'm quite happy to go and argue the point that someone got that ECB minutes release earlier, and this move here is not human beings. This is all algos and AIs and automatic traders who are picking up words from the minute statement and then putting it into their system and coming up with an equation that says sell. And this is what this is. No human being got on this move unless they were already short going into it. So this is where I have a massive problem with the market and a massive problem with the summer markets in general, because there's just no consistency, there's no efficiency, there's no direction. 36 pips in under a minute based on euro overshooting terminology, which has gone into someone's algorithm. That's not human. That's no way that's a human. Gone into someone's algorithm or AI or whatever, and it's come out with a set of configurations, and it says this means that they've got dovish rhetoric more than they should have, therefore sell euro. And that's what that is. And then a sudden retracement back. It's just not good for the market. And in my honest opinion, it starts to push it further towards exchange-based rather than being OTC, which is now. It was really something which kind of didn't shock me, but it's disappointing to see in the market because it was very, very evident. Just talking to other traders and other analysts out there, and they all felt the same way. They didn't really understand what the move was in the morning. Why was it being dripped? What, there was no data out. Was it just people taking money off the table? Fine, but we went kind of 60. Let's have just a quick look. So we moved there. We're trading 65s. We get down to double O. So say a 65 pip move, drip fed. Look at that. No, some pullback or backing or filling. It's called nice order, but then smack. So this just stinks of a leak. And this just stinks. This bit here stinks of algo and AI trades. So that's where we are in the market at the moment. We're stuck with these blips. There's no liquidity in there as well. But I was thoroughly disgusted with the move yesterday. And where we are trading back now, middle of the road, everything's over and done with. So this is just the thing that's going to kill short-term traders and day traders unless you're the right way around, because you're only in for a few pips. So frustrating it is, guys, really frustrating, but that's the markets at the moment. I mean, it's the combination of the Trump slump that we had yesterday, the ECB minutes when they're all on holiday, which is great. We did have a very shocking event that happened in Barcelona around about 4ish yesterday. ISIS have claimed responsibility for flying a car into a crowd, and 13 killed and numerous other injured, and a second attack, which was scuppered by the local authorities, was planned. These things are terrible, and they used to be market movers, but they don't seem to do anything anymore. We're so used to it now. It's horrible, and our feelings are out there for these people. But in terms of market economic data today, we're really flat. Nothing that's an FOMC meeting with Kaplan, and yeah, that's about it really. I really wouldn't pay much attention. I'd try and get out early today if I could. We did have an interesting one yesterday in that initial jobless claims dropped again, which is great, which is basically the jobless claims is the number of individuals who have filed for unemployment insurance for the first time during the past week. So as long as this keeps dropping, and it has kept dropping, it means that more people are either not claiming unemployment or going into work. There are, I think, on averaging about 200,000 new jobs, which is NFP. But this just says that people are not filing for job insurance, which is basically just a dole. That doesn't mean that they're not unemployed. So take it how you want. Okay, so that's about it for this today. But and I just keep it nice and tight today. It's been another eventful but non-eventful week, and we just kind of trying to get to the end of August with some cash in the bank so we can trade out for the rest of the year. At the moment, it's just frustrating unless you get it right, of course. Okay, for me in the front lines, have a good trading day. I'll speak to you soon.